Ladies and gentlemen, we're coming to you today and we're going to be talking about all of these programs right now where you don't have to put any money down and you're not going to have insurance on your properties. We're going to be looking at the Canada and United States, the two countries, and some of the products that are coming out right now because a lot of people are getting squeezed. So we're going to be looking a little bit on both sides, and I want to know what you are going to think about this because it's somewhat controversial and it really depends who you talk about. So this article right now is called Leading Lenders Are Rolling Out 1% Down Payment Mortgages. Now, 1%, in this case, some are 0%. Now, it says there's affordability challenges and they're conspiring to keep would-be buyers out of the housing market. The nation's two largest mortgage lenders, this is in the US, have rolled out programs that allow borrowers with modest incomes to qualify for a loan of just 1% down. So Rocket Mortgage was in the news. It's the biggest one. The largest lender in the US in 2022 announced this One Plus program, and United Wholesale Mortgages, number two lender, they have a 1% mortgage that's down. And so it says these incentives allow borrowers who make less than 80% of their neighborhood's median income to obtain a conventional loan with just 3% down. So if you are living in a neighborhood and that exact neighborhood, you are like, let's say, the poor compared to all your neighbors, you now are going to qualify for this loan. The problem is that this loan is higher risk, a lot more risk, right? And now both programs come at a time, the article continues, when home prices remain near record highs and mortgage rates are more than double than what they were 2 years ago. In some cases, they're 5 times as high. With affordability being tougher, people are getting boxed out. And I want you to notice this. This guy is the executive vice president of capital markets at Rocket Mortgage. And then I quote, free money helps people want to buy a home. I really need you to hear that again. The head of Rocket Mortgage, he says free money helps people buy a home. So this is what I'm asking you is where on earth is there free money? Free money, it doesn't exist. Free money has to come from somewhere. It's like the government saying, well, the pooled money, the amount of money from the government, there is no money in the government. Money can only be either created, which is inflation, or taken from somebody through tax. And so where does that money come from? I have to ask you guys. And so Rocket Mortgage is given this scenario. A buyer of a $250,000 home might need 3% down or $7,500. But in the new program, Rocket covers $5,000 through a grant. A grant, you guys. So they got to now cost themselves that $5,000. So where does it come from? They either have to be getting a subsidy from the government, which is coming out of your taxes. They have to get a subsidy, or they have to charge everybody else who has a mortgage a higher premium to compensate for that $5,000. I mean, it's business, right? They have to continue to make money. So that's kind of weird. Now we're going to look a little bit again at the US. The US is now subsidizing high risk home buyers with the cost of good credit. So in the first problem that we see, now it comes down to what I've heard called job privilege because you have a high paying job. The second portion now comes into credit privilege. So now if you have a high credit score, you have to pay more. So now they're known as loan level price adjustments. They love their four-letter terms, right? This is in the US. And it's going to be a challenge to try to explain to somebody this is. I worked my whole life for a high credit and I've put a lot of money down. And now you're telling me that's a negative now. And it's a hard conversation to have. Now, this is a hard conversation to have because my whole life I was told by my parents that I have to make money. I have to always spend less than what I'm making, put some money aside, make sure you have a high credit score. Because if you have a high credit score, you're going to get a better loan from the government. Here's the problem. If you want something done at a government level or local level or whatever country, they incentivize that good behavior. We somehow seem to be diverging off of this path and incentivizing bad behavior, which doesn't really make sense to me. I mean, I'm going to go way out on a limb. Like it's if I commit a crime, do I get a check in the mail because I did that? Like, how do we incentivize bad behavior? I don't understand that. Now, Bank of America is also launching a zero down payment mortgages to help minorities who get their first home. So they said that they are launching a zero down payment, zero closing costs to help you get into properties. And it says, though, I laugh at that, the loans are subject to rigorous underwriting, but I don't understand. If you don't have to have a job or good credit, or you don't have to put any money down, or you don't have to have any insurance, no closing costs, I don't know what is the rigorous underwriting, to be honest. So this to me, I don't know. I feel like we're incentivizing bad behavior. Now, let's look at Canada in a second. But, I like Rich Dad, Poor Dad. He's a pretty cool guy. This is his accountant, Tom Wheelwright. And Tom Wheelwright wrote this book called Tax-Free Wealth. Inside of Tax-Free Wealth, he says if you want something done at a government level, it is more efficient for them to incentivize it. And so as he goes through this book, he talks about all these different countries and all these different programs. And these programs are available in a lot of different countries. So some of the pages, it'll have like a list of all the countries where it is available. So what he says is every country needs 5 things. It needs jobs, houses, oil, technology, food. If you need those 5 things, you have to incentivize it. So they'll say, if you buy $1 million worth of farm equipment, we'll let you depreciate it faster. So now there's a tax advantage for you to buy new equipment, and now you can produce more food. And that's better food security for your country. So it makes sense. So if you want something to be done, you need to incentivize it. The problem comes back, are we incentivizing bad behavior? Let's look at the Bank of Canada right now. The Bank of Canada now wants digital credentials. And so we don't have to dive deep into this, but instead of just having like a driver's license, they want everything that you do to be attached to a digital ID, which they're calling digital credentials. And so this is the first step. This is what they do in China, right? Where everything is connected to your digital ID. They know everywhere you go, whatever you do. Now, this is usually going to come into contact with central bank digital currency. David, there's not going to be a central bank digital currency. That's ridiculous in Canada, really. So just go to bankofcanada.ca. Bankofcanada.ca. I mean, this is their head page. I'll just click on their logo, head page. If you go down, they have articles in the top of their news. So it happened just a couple days ago. Let's go down to page 2 and look at that. Bank of Canada launches public consultations on a digital dollar. Guys, we don't have to read the whole article. I did a whole video on this. But what I'm saying is that this, guys, is going to be coming. So the digital ID, central bank digital currencies, we're now at like 110 countries look into it. This is going to be coming. And so at the end of the day, I know that things ebb and flow over time, but no matter what the feelings are at whatever time, at whatever period, and this is never a government left or right, we always are just following the money, and we want to follow something that works. At one point, 2 plus 2 always has to equal 4. Math always has to make sense. And so if we are going to go buy a property, it's always been 30% of your salary toward rent or mortgage. It always has to revert back to that mean. So it can get over time way out of whack during massive blowups in 2006 before 2007, right? That's got to happen. And when it gets out of whack again, it's got to come back to the median. And so at one point, math and things that make sense always have to come back into that public world. Now, what do we think is going to happen right now? Canada's big banks are logging 13-fold rise in loan loss provisions. What is a loan loss provision, I ask you? So this is when the banks, who have a lot more information than me and you, these banks are looking at their loan book and seeing that there's mega problems coming down the road for residential. And first, though, is going to be commercial, in my opinion. Commercial is going to fall first. We have a lot of videos that we did on the channel about commercial real estate. We'll link it up above. So in commercial real estate, it's going to actually take a tumble. Why? They know that this is coming. And so why do you think they are putting tens of billions of dollars aside? The United States, trillions of dollars aside for loan losses, where people are going to default on their loans. What do they know? What do they know that me and you don't know? And here is my other question. As you're heading into a bubble, in 2005, 2006, they were loosening the lending standards. Everybody can pile in, right? That last moment to make some money. So if we look at the psychology of money and look at the charts, there always is an area of optimism, belief, thrill, euphoria. When homes are going up $100,000 a month, euphoria. And then a drop down. Did you see this happening at the end of 2021, beginning of 22, when people were paying exorbitant prices, 50 offers per property, and then a drop? And then you land in this complacency phase where people just don't want to believe that it's going down, and they're doubling down by the dip. And then there's something bad that follows. So I'm just asking you, what do you think? If banks are saying something like, we are going to put a 13-fold rise in loan loss provisions, if this is what they are doing, okay, now that's a double whammy, because number one, not only do they think there's a problem coming, but number two, when there is a lot of problems brewing, they're sucking all that money out of the economy and putting it in a bank account somewhere, because they cannot risk to lend it out. They need it in case something bad happens. So now they can't lend out to mortgages, they can't lend out to loans to companies or anything like that. So it's an even bigger problem. So they think that something is coming, right? And so if we follow the psychology money, this is housing, this is homes over time, we are in this complacency phase before it really drops off. But when we are in this complacency phase, this is when we normally have all of the banks and everybody trying to get you in that last minute. We got to make a couple extra dollars. How can we loosen up the lending standards like 2006 all over again? Can we do that? And then I ask you, if we jump into, well, what if we can give you what we talked about before, a 1% down payment? What if we can give you a 0% down payment? What if we can get people who have very low income and low credit scores to buy homes and sign up for more debt? What if we could take some of the people who actually cannot afford a home and bury them in debt anyway? This is why history does not always repeat itself, but it always rhymes, right? And so there has to be somewhere in us that we're realizing that something doesn't feel right. And so at the end of the day, no matter what happens to the upside or downside, Benjamin Graham always talked about Mr. Market. No matter how it goes, it always has to revert back to a medium where math makes sense. And so, number one, I think that things will have to even out eventually. Remember, there's waves in the ocean all the time, but eventually when the wind dies down, it calms down to sea level, right? Number two, we have to think in ourselves, what are we incentivizing? Are we incentivizing good behavior, which is how every tax code in every country is written? Or are we going to start incentivizing bad behavior? And I mean, at the end of the day, just think of it with our kids or something like that. We want to incentivize good behavior. If you get an A on a test paper, maybe you're going out for ice cream. But if you fail, of course, doesn't mean that you're going to Disney World. We have to incentivize good behavior. I don't know. Maybe I'm crazy. I'd like to know what you guys think. Please let me know down below. Are we heading into a time where there's going to be a great credit crunch? I think that we're already in it. I think that we're already seeing it. But there are fantastic, fantastic opportunities that are going to be coming out of this. I can't wait for it. I hope that you can't wait for it. Remember, the next 2 years is going to dictate the next 2 decades of your life. And I hope that you are ready for it. All right. If you guys find any value to this, please consider subscribing. Send this to your friend. And we hope that this helps. And we'll talk to you soon. Have a good day.